Hello, everyone. I am your guide as we navigate the world of AI and emerging technologies today. We are living in an era where technology is rapidly evolving, and it's reshaping how we live, work, and interact. In the aftermath of the global pandemic, these technologies have assumed an even more pivotal role. We've seen a seismic shift towards digitalization, with AI and emerging technologies playing a significant part in this transformation. Over the next few minutes, we'll delve into how the pandemic has accelerated the adoption of these technologies. We'll explore promising sectors for investment and discuss some risks and considerations you should bear in mind. Finally, we'll provide some practical tips on how you can start investing in these sectors. So whether you're an experienced investor or just beginning your journey, this video promises to be an enlightening exploration of the world of AI and emerging technologies. Stay tuned as we dive into how the pandemic has accelerated the adoption of these technologies. The pandemic has been a game changer, accelerating the adoption of AI and emerging technologies. It's like someone hit fast forward on a movie, and suddenly we're living in what seems like the future. The need for social distancing and remote work has driven businesses across the globe to rethink their strategies and operate in ways they never thought possible. And guess what? AI and emerging technologies have been at the forefront of this transition. Take remote work, for instance. The necessity to work from home has led to an increased reliance on AI-powered tools. Whether it's virtual assistants helping schedule meetings or AI-driven project management software streamlining tasks, the integration of AI in the remote work culture has been nothing short of phenomenal. Then there's e-commerce. With brick-and-mortar stores closing their doors, consumers have turned to online shopping like never before. This surge in demand has propelled e-commerce businesses to leverage AI for personalized shopping experiences, efficient logistics and inventory management, and much more. But perhaps the most significant impact has been in the healthcare sector. In an era where physical distancing is the norm, the role of AI in telemedicine, patient monitoring, and even drug discovery has been pivotal. From AI-powered diagnostic tools to predictive analytics in patient care, these technologies have not only helped us manage the crisis, but have also paved the way for a new era in healthcare. The pandemic has undeniably been a catalyst, fast-tracking the adoption of AI and emerging technologies. But this isn't just about surviving a crisis. It's about the dawn of a new technological era, and with this rise comes an array of investment opportunities. So what does this mean for investors? Well, it's simple. The sectors that have embraced these technologies are the ones that are likely to thrive in the post-pandemic world. And these sectors are where the most promising investment opportunities lie. Now we'll look at which sectors hold the most promise for investment. There are several sectors within AI and emerging technologies that show great potential for growth and investment. Let's delve into some of these promising areas. First up, we have machine learning, the science of getting computers to learn and act like humans do, improving their learning over time in an autonomous fashion. This sector is growing rapidly, with tech giants like Google and Amazon leading the charge, alongside emerging players such as OpenAI. Next, the field of natural language processing is making waves. This technology, which enables computers to understand, interpret, and generate human language, plays a significant role in our daily lives. It's at the heart of virtual assistants like Siri and Alexa, and is a key technology for companies like Microsoft and Facebook. Robotics is another sector that's been supercharged by AI. The applications are endless, from manufacturing to healthcare and even our homes. Companies like Boston Dynamics and ABB are pushing the envelope in this space. 5G, the next generation of mobile networks, is set to revolutionize our world with significantly faster speeds and lower latency. Tech titans like Qualcomm and Ericsson are heavily invested in this space, and it's certainly a sector to watch. The Internet of Things, or IoT, is all about connecting devices over the internet, letting them talk to us, applications, and each other. It's a booming sector, with companies like Cisco and Honeywell leading the way. Lastly, quantum computing, although in its infancy, holds immense potential. It promises to solve complex problems that current computers struggle with. Big names like IBM and Google are investing heavily in this technology. There are also various ETFs available for those who prefer a diversified approach. Examples include the Global X Robotics and Artificial Intelligence ETF, the iShares Exponential Technologies ETF, and the Defiance Quantum ETF. However, like all investments, there are risks involved, which we will discuss next. Investing in AI and emerging technologies brings with it certain risks. The allure of the tech frontier is undeniable, but before you dive headfirst into this pool of potential, it's crucial to be aware of the underlying risks. The first risk we need to consider is regulatory changes. Governments worldwide are grappling with the ethical, legal, and societal implications of AI and other emerging technologies. As they formulate new laws and regulations, these changes could significantly impact the sector's growth and profitability. Imagine for a moment a future where stringent data privacy laws restrict AI's ability to learn and adapt, potentially stunting its growth. Next on the list is competition. The technology sector is notorious for its cutthroat competitive landscape. With every Tom, Dick, and Harry trying to build the next big thing, the rate of innovation is breakneck. But this fierce competition also means that even the most promising ventures can easily be overtaken by a more agile competitor. Consider how the rise of smartphones blindsided many established tech companies, leaving them scrambling to catch up. Market volatility is another risk factor. Tech stocks, especially those in the AI and emerging technologies sector, can be notoriously volatile. They're often driven more by investor sentiment than by traditional financial metrics. Think about the dot-com bubble of the late 90s, where skyrocketing tech stocks suddenly crashed, wiping out billions in investor wealth. So how do you navigate these risks? Well, the answer lies in diversification and risk management. Don't put all your eggs in one basket. Spread your investments across different sectors, companies, and even geographical locations. This way, if one investment doesn't pan out, others may still yield returns. And always do your homework. Understand the technology, the market, and the players before you invest. Now that we've covered the risks, let's talk about how you can get started with your investments. Investing in AI and emerging technologies can seem daunting, but it doesn't have to be. Let's break it down into actionable steps. First and foremost, you need to decide where you want to invest. This could be in individual stocks, exchange-traded funds, also known as ETFs, or mutual funds. Individual stocks give you ownership in a single company, while ETFs and mutual funds allow you to spread your investment across multiple companies, providing a level of diversification. Now, if you're interested in picking individual stocks, it's crucial to conduct thorough research. Look at the company's financials, understand their business model, and assess their position within the industry. But remember, investing in individual companies carries a higher risk compared to ETFs or mutual funds, as your investment is tied to the performance of a single entity. On the other hand, if you prefer a diversified approach, ETFs or mutual funds specializing in AI and emerging technologies could be the way to go. These funds pool money from numerous investors to invest in a portfolio of stocks, spreading the risk across multiple companies. This way, even if one company doesn't perform well, your entire investment isn't at stake. Now let's talk about resources for further research and learning. Websites like Investopedia, Financial Times, and Bloomberg provide a wealth of information on market trends and investment options. Tools like Yahoo Finance and Google Finance offer real-time stock tracking and financial news. Online forums and social media platforms can also provide insights, but be wary of misinformation. In addition, consider enrolling in online courses on investment basics and emerging technologies. Websites like Coursera, Udemy, and Khan Academy offer courses that can help you understand the intricacies of investing and keep you updated on the latest in AI and tech. Lastly, don't forget to consult with a financial advisor. They can provide personalized advice based on your financial goals and risk tolerance. Remember, the key to successful investing is continuous learning and staying informed. We've covered a lot of ground today about investing in AI and emerging technologies. We've seen the transformative impact of the pandemic on these sectors, accelerating adoption and opening up avenues for growth. We've delved into promising sectors like machine learning, natural language processing, robotics, 5G, IoT, and quantum computing, and considered the risks involved, from regulatory changes to market volatility. We've emphasized the importance of diversification and risk management and provided actionable steps to kickstart your investment journey in these exciting domains. Remember, the future is not something we enter, it's something we create. With knowledge and foresight, you can be part of shaping that future through your investments. So, continue learning, stay curious, and consider the immense potential that AI and emerging technologies hold. It's a thrilling time to be an investor. Thank you for joining me today. Don't forget to subscribe to our channel and leave any questions or comments below. Until next time, stay informed and invest wisely.